So what are the benefits and the risks? See, the long-term potential is that yes, many of you said that it would yield into substantial returns. Yes, because you're able to capitalize on the right moment at that point, that you're able to buy more units at that particular time, right? Whether it is right or wrong, time will tell. But the common popularity or common conception is that yes, you will be able to capitalize it. You are capitalizing it at the right time, right? Then there is simplicity of execution. Right? The whole idea is that you just take a phone, you do it once, and then you leave it. It's very simple. It's very straightforward. So no explanation in that. Whereas SIP monthly it goes, you get something on a monthly basis, and you get something where you have to. It's not very efficient for you also, but yeah, it's a better way for you to keep building wealth if you don't have too much time to be very active as a saver. Right. So it's very straightforward. The execution is very simple, right? Is it cost effective? Right. My idea is yes, it can be because it avoids multiple transactions, right? But overall, and in the long run, it does not matter because in the long run, you are going to look at somewhere between a 9 and a 12% sort of return, or in a very good case, a 12 to 15% sort of a return, right? So this does not actually matter, right? This entire thing debunks the whole thing of the reasons that are given to you by narratives outside saying that yeah, it's a cost effective method, so you go ahead and do it. Now, two important risks. One is your volatility risk. See, if you're not somebody who can handle market fluctuations, then lump sum is definitely not the strategy for you. Like, markets are volatile, markets will always be volatile, right? That is the nature of the market, right? So if you're not someone that can take up short-term fluctuations, volatility like what we're seeing now, then lump sum is definitely not that strategy for you. Then it's better off if you just stick to doing your SIPs. That's the best way for you to do. Try to step up your SIP. Market timing risk. See, when you choose a lump sum strategy, right, a 12% or a 15% fall can scare you, right? So how many of you are, you can be very honest, how many of you are actually scared to see this level of fall? In a small cap index, it is 20-25% from its peak. Mid cap again is the same thing. Your larger cap is somewhere between 13 to 14%. So you can be very honest. How many of you are actually scared? Are you seeing this for the first time? Okay, very honest answer. Yes, I appreciate that. Very honest. Okay, you are scared. Not scared, but seeing this as an opportunity. Okay, again, a very honest answer. Yes, okay. Started getting scared, but still saying an opportunity. All right. It's a very thrilling scenario for you to be scared and to take a step out of your comfort zones. Okay. Anything about 20% correction will scare me. Okay. So the small cap, mid cap has scared you. Understood. Two times in 2008 and 2020, invested in 2007, recovered in 2018. Okay. But are you scared? Not scared. Okay. Yeah, so most of you are scared, right? And it's a very true, honest scenario because we've had a one way up here. We've had a one way up in the last 4 years, where after COVID, after that entire fall, after that, it's just been a one way street up. And whatever opportunities you have got, you were told that you have to take opportunities of it. Yes, this opportunity again is this fall again is an opportunity for you to capitalize on, but many of you will have that question as to how much. And that depends on your financial condition. You have to work with an advisor, you have to work with a planner to understand how much of a commitment you can make from when you're choosing a lump sum investment strategy, where how much do you capitalize on, and to keep aside from your savings in a month that you take advantage of in a market fall like what has been happening over the last 1 week, right? So the whole risk of market timing goes away when you're parking some funds continuously and working with someone. Otherwise, you will always be scared of standing in the side saying, no, 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 do I enter? The water is still very cold. I want the water to be a little warm, then I'll enter. No, that is not how investing and saving works. You have to work with somebody for you to be able to get over this sort of fear, to be able to get over this sort of risk. Only if you're able to, it's like SIP, right? But here you're trying to be slightly better off to say that I will try to time it. Usually, that you cannot do by your own self. You need to work with other people. And if you've been working with us, then you know that from our side on the program, you have been getting multiple messages. You've been getting multiple calls from our side on mails to understand and to make you understand that as per your risk appetite, you can sort of go ahead and do it. As per your risk appetite, you should not do this. Right. The whole idea for us is to make sure what you should not do, not what you can do. Right. Once you understand what you should not do, then can do becomes very simple. Then the whole fear itself goes away.